Credit score. You've heard of it, you know it's important, but do you really understand it? Do you know your credit score right now? Do you know what doors it opens, and perhaps more importantly, what doors it closes? In this video, we'll be exploring some of the most important questions you should ask yourself when building your credit report, because like it or not, your credit score will have a huge impact on your life. Your personal credit score is a metric that companies use in order to decide whether they're going to offer you finance for a purchase. In simple terms, your score shows how you managed your finances in the past, and it's a strong indication of how you're likely to manage them in the future. A few simple examples of where your score matters are a phone contract, a credit card, or a house mortgage. In all of these cases, your credit score will impact the decision in one way or another. To fully understand the implications here, think about this. A really bad credit score can stop you from getting a £10 a month phone contract. A really good credit score could allow you to borrow £500,000 from the bank to buy a house. But then I hear you asking, who decides my score? Well, a few people, and it's important to know who they are. There is more than one credit score provider out there, and they have a sea of data on how you spend your money, how you pay your bills, and how you manage your finances. All of them will score you differently, and can also tell you different things about your finances that you might not be aware of. My suggestion is to find the 3 main credit agencies in your country and get an app that gives you access to the data they have. If you live in the UK, the main ones are Equifax, Experian, and TransUnion. Now the million-dollar question is, how do I improve it? Most free credit score apps will give you a rough idea of how to improve your credit, but they often do a pretty poor job at doing so. And that's because they want you to pay for this information. If your score is half of the maximum score or less, you're probably doing something particularly bad. In this case, I'd recommend trying the free trial option, which gives you a detailed credit report that tells you everything that's dragging your score down. You can download this and cancel your subscription before you start paying, and then work on fixing your score. Now here are some common things that might be dragging your score down that you can easily fix. Unpaid bills or subscriptions. These are typically very low balances with very high impact. Don't waste your time trying to dispute these, just get them paid as soon as possible. Bounced payments. This happens when you don't have enough money in the bank when the lender tries to take their payment. In this case, get a budget in place so you know how much you need in the bank for outgoings, and make sure you've got more than enough to cover that. How much more? Well, that's up to you, but I'd recommend having at least £500 more than you need in your main account every single month, and 3 to 6 months of your outgoings as a safety net in your savings account. Address and electoral roll. If you move house, make sure you change your address on your accounts as soon as possible. Then, register on the electoral roll at the new address as well. Lenders do an identity check alongside the credit check, and this might fail if your address is wrong. These simple things can increase your credit score dramatically and only take you about 10 minutes to complete. Manage your credit card better. This is a big one. If you can manage a credit card without getting in trouble, then get one. Use it every month and do not max it out. Do not go over 50% of your limit and pay it off every month. Get a credit card that gives you points every time you spend money to give you some extra benefits. Remember, it's not there for you to buy something that you can't normally afford. Once you get the hang of it, try and increase your limit without spending anymore. This will increase your affordability in the eyes of a lender and will show them that you can handle more responsibility. Lastly, don't take cash out from your credit card. Lenders see this as a sign of financial struggle. Be stable. Lenders don't like it when you change your address, credit cards, or bank very often. The last 2 you can manage easily. But if you need to change your home often, say you're a student, register your accounts at your parents' address if you can. A more stable lifestyle also signals stable finances. Check for errors. Sometimes credit score providers receive bad information and they mess up your credit score. Get in contact with them and fix this fast. This could be a loan that you paid months back but still shows as outstanding, or a cancelled direct debit that shows as a non-payment. A short phone call could save you hundreds of points here. So now that we're back into the yellow zone, we want to cross over into the green zone. This is where all of those juicy cheap rates and large loans become available to us. Average age of credit account. In simple terms, your average age of credit is the length of time you've had credit lines in your name, such as credit cards or bank accounts. This makes up 15% of your credit score, and although it's not an exact number, the people with the best credit scores have an average age of credit of over 10 years. So think twice about changing your bank or opening a new account. Don't get rid of the credit card you had for many years, but get rid of some store cards or other accounts that you've opened recently and don't use. Pay your debt. If you've taken a loan for some home improvements or a new car, making those monthly repayments will positively impact your score. That being said, if you're looking to buy a house, those monthly repayments will lower your perceived affordability. If you had the choice between putting money in your savings account or paying existing debt, it might be worth taking the second option. Joint accounts. Another thing worth knowing is that if you share a joint account, a utility contract or a tenancy agreement with someone, their bad habits could also drag you down. Lenders will see their bad financials as a negative sign for yours, even if you manage your money well. Multiple hard searches. Every time you do a hard search, it will show on your report. If you do too many, it will lower your credit score. To avoid this, don't apply for something that you're 99% sure you won't get and hope for miracles. Instead, fix your score first, then apply when you're sure you'll get approved. If you get refused, then find out why before you try again. Too many searches will make lenders think you're desperate for money, and they will be less likely to approve you. What if I mess up? At one point or another, you will mess something up on your credit score, whether you realize it or not. Some people mess up really bad. The first thing to do here is to realize you've messed up and seek help. There's government schemes in place and companies that would give you free advice, set up a debt relief order, or an individual voluntary arrangement to help you get back on track with your finances. These schemes allow you to consolidate your finances into one affordable monthly payment and even freeze the interest payments to help you repay your debts. You will have no control over your finances, but on the bright side, it will get you out of trouble. So will this affect your credit score in the long term? Well, yes, but only for 6 years. Sound like a lot? Well, it is. But even if lenders see an IVA on your file, they might still offer you funding if your last few years have been clean and you manage your finances better. But it will definitely cost you more. 6 years later though, you're as good as new. Just have to keep it that way. What if I don't have a credit score? This can apply if you're young and have been living with your parents all your life. To fix this, you can simply follow the steps in question 3. First, register on the electoral roll and get a bank account. Make sure there's money going in from your job, your parents, school maintenance payments, and so on. And then, put some bills in your name. The phone contract, utility bills, car payments, and so on. Lastly, give it some time. The longer your credit history, the more confident lenders will be in predicting how well you can handle money, and the more likely they'll be to say yes whenever you need them. If you enjoyed this video, please like and subscribe, and if you want to learn more about personal finance, click here to watch my video about 6 financial lessons that schools fail to teach you. I'll see you in the next one.